Alright, so in this video we're going to do the statement of cash flows at more of a intermediate level. So first video, part 1 was pretty beginner, but now it's about to get real. Part 2. So here we have the next year for this company, made up company, and we have comparative balance sheets again. You always do this with statement of cash flow. You always look at, here's the beginning, it's like 2015 balance sheet, and here's the ending, the 2016 in this case. And then we're going to see how everything changed, and we're going to use that information to figure out operating, investing, and financing cash flows. Other important information would be written over here. So it's important to know what the net income is. Dividends, always have to know that is a negative financing cash flow. And then here, some other pertinent information. Company issued bonds for cash. Like, I can see they issued bonds. You see that down here with the bonds payable going up by 150K. But it's important to know that they issued it for cash and not for something else, like a building or something. And they let you know that the land, the building, and the equipment that they all bought, because you can see they bought some here. Like, you see the equipment account went up, and so did buildings and land. All that stuff was bought with cash. Okay, so let's see how we're going to solve this. First thing we do is figure out the change in cash. So as you can see from that sheet there, cash went down by $12,000. Okay. Alright, that's easy. And so next thing we'll do is operating cash flows. Definitely, I would say the hardest cash flow. So remember, indirect method, start with net income, and then take out all those accruals, and we'll be left with operating cash flows. So which things are operating? Well, okay, accounts receivable went down. That is operating. Prepaid expenses, that is not financing, that's not an investment, that is an operating. Land, buildings, and equipment, look, those are investments. When you buy a piece of land, you buy equipment, you're making an investment. You're hoping to produce more with that. But the depreciation on the buildings and the equipment, those are operating expenses. Accounts payable, I think we touched on that last video. That is operating. But bonds payable, that's like you're going to a bank or you're issuing public bonds there. You're financing with that. That's big borrowing. That's not like accounts payable, like, okay, I owe you a little bit of money to my supplier or something. Okay. So accounts receivable, oop, went too far with that. Let me go back one. No, I can't. Okay. Look, accounts receivable went up. No, it went down, I'm sorry. So if accounts receivable goes down, you are collecting cash. That's an operating cash flow. But are you recognizing any income, any revenue with that? Well, actually, no, right? When you recognize the revenue when you sell it, not when you collect it. So that's a situation where you're getting cash, but you're not getting any revenue. So your net income, your accrual-based measure, is $10,000 too low if you're trying to be on a cash basis, right? You got to add that. Alright, next item, prepaid expenses. So it looks like you started with 0 and you ended with $6,000 on some of your, whatever it might be, prepaid rent, prepaid insurance. So that's a negative operating cash flow, but no expense, right? If you buy prepaid rent goes up, cash goes down. I don't see any expense there. But it is a negative cash flow, so we need to subtract that. Okay. Alright, the buildings, you have depreciation of $11,000. I can see that because you started at 0, you ended at 11 for the accumulated depreciation. And then for the equipment, you have $10,000, so 11 plus 10, $21,000 of depreciation expense. Now, that is a real expense that's going to knock your net income down, but there's no cash flow with that, right? Depreciation, there's no cash flow. So you better add that back. You gotta add that one back, huh? Okay. Accounts payable. Alright, so accounts payable went up by 35,000. Okay. So there was expenses when you did that, right? I'm assuming there was, I don't know where you owe the money. Maybe you owe it to an advertiser, or you owe it to your employees for wages paid. It's some kind of expense goes up, and then accounts payable goes up. So there's definitely an expense, but there's no cash flow. So I need to add that back, right? My net income is like is accounting for like already subtracting that 35,000, but I'm like, no, I need to add that back because there's no cash flow there. And that's all the operating items I see. So that's going to give you your operating cash flows once you do the math there. 194,000 for operating cash flows. Okay. Last part is do investing and financing. You can do that either order. Let's do investing. Okay. So for investing, we already said, I think on the last slide I wrote it down, you know, land, you bought land, buildings, and equipment. Those are investments. And that's all I see. So this is a lot easier than the operating section, like the investing and financing. You just say, all right, I spent $70,000 on land, clearly. I spent $200,000 on buildings and $68,000 on equipment. So those are all negative investing cash flows. And that's the total. So if you do the math, you'll get the total. You add it up, it should be negative $338,000. Financing cash flows, also pretty easy. You pay dividends, that's negative cash flow. And then you receive some money from issuing bonds, that's a positive cash flow. And you didn't issue any stock because I can see your common stock count is unchanged. So there you go. Plus 150 minus 18. So it should be $132,000 provided by financing activities. So when you go to make your statement, that'll be the last thing you do. It just looks like this. You say net income, and you say, okay, adjustments to reconcile net income to the net cash provided by operating activities. And then you list out each individual item there. You can see there. And so you get to operating cash flows, which is often called net cash provided by operating activities. Then for investing, you list them all out, and you get to net cash used by investing activities because it's negative. That's called an investing cash flow. And so on. Financing cash flows. Alright, and so if you add them all up, you say, okay, positive, operating cash flow here, here's the investing cash flow, and here's the financing. You should get negative 12,000, which is your change in cash. So it all works out. Alright, hope that was helpful for you. Have a good one.